Hey guys, what's up? How's it going? Robin here. Welcome to the REIT investing case study. This is real estate investing case study where we put money into real estate stocks once a week. I usually put about $100 a week, and we've been growing this portfolio completely from scratch. And the goal is to basically make passive income from real estate stocks without doing any work on our part. Basically, try to mimic, owning real estate, but without having to deal with being a landlord and tenants and all that kind of stuff. We're basically putting this money into a portfolio and seeing how we can do. So the main idea is to put money into REITs, specifically Canadian REITs, and then kind of grow it and get that passive income coming from these REITs. Since most real estate based ETFs or REITs or real estate stocks generally pay a monthly dividend, and that monthly dividend is kind of similar to, like, let's say we owned a house and we rented it out and somebody paid us rent every month. That's the same kind of basic concept that we're trying to mimic here. And here's our portfolio. So we have $835 in a Wealthsimple trade account. We have about $100 pending for, we're going to be buying some different stocks come Monday. I know a few people have mentioned before, like when I used to buy my stocks on the weekend, sometimes it's smarter to wait until Monday so you can do it just in case the prices change or whatnot. So I'm going to wait till Monday before I put my money in, but I'm just going to show you guys what ETFs and what REITs I'm going to be buying this week. And I'm just going to be buying one this week, but before we go into that, let's kind of just go a quick little overview of the portfolio that I have so far. So far, here's our portfolio. If we go all time, we are down $64, which is 7.82%. Real estate has been doing a weird flop up and down right now in Canada. Once again, nobody really knows what's going to go on with the real estate, but I think real estate in the short term is doing pretty good. I think long term we might see more of a negative effect, but we really don't know. We'll just have to wait and see how things go. And here's our portfolio. We have RioCan is our first REIT here that we have for $15 Canadian. The second one we have is First Asset Canadian REIT, and then we have VRE, XRE, and ZRE. So these are just different REIT ETFs. So we're spread across the broader market in Canada. And the thing I love about Canadian REITs is they're so cheap, they're easy to get invested in, and they pay really nice dividends. So we're getting dividends on a regular basis all the time from these REITs. Mostly on a monthly basis. I think actually all these REITs that I actually have right now pay on a monthly basis. In fact, let's check our dividends account because it is it's the beginning of May, end of April, so we should have some dividends sitting in our account. I'm going to go into our Wealthsimple trade here. We're going to go filter. We're going to go dividends, and we'll go done. I'm going to see some of our dividends here. Now, one thing I want to I picked the wrong account here, so I'm just going to swap that to my personal account. Now, one thing I want to point out is if you guys want to watch this this REIT investing case study, I'll put a link to the whole entire case study. You can check the other updates, the other ones I've done. I basically do an update once a week. So you guys, if you want to see how I built this portfolio from scratch, you can watch those videos and you can see all the income we made. These are the dividends we made from April. So April 2nd, we got a dividend from ZRE of 45 cents. And then VRE, we had 27 cents. And then XRE, 88 cents. And then REIT, RIT, we got 0.68. So you can see our dividends are slowly starting to add up. This portfolio is a little bit new, like it's only a couple months old. So we're still kind of building out. By the end of, I want to say May, we should be getting more dividends, and it should just keep kind of rising. You'll see here. I haven't added this to my dividend investing spreadsheet right now. But you can see that the April dividends are already a little bit more from the March, and they're just going to kind of keep going up from there. So that's kind of how we're doing, and we're just reinvesting our dividends, and we're just growing this fund completely from scratch. Now, the REIT that I'm going to be buying today is H&R REIT, and we're going to check out. Let's check that REIT out on Google. We're going to look it up because a few of you guys have mentioned that REIT, and I have been looking at it for a while, and it looks pretty attractive. So let's check it out and let's see how it is. So this is the H&R Real Estate Investment Trust. I guess the ticker symbol is HR.UN. And you can see here that this is one that took a pretty big drop. I mean, all REITs, when the coronavirus came into the country of Canada and it locked everything down, everything went down. But this is one that really took a big tumble, and I think this is why a lot of people have been mentioning this lately, because that's such a good buy right now. We can see here that it's about $21 Canadian, it's sitting about $20 Canadian, which is the same as these other ones here. You can see they're sitting about, around $20-ish, and they took a bit of a dive. But this one, like, look at this one. This one went down a lot. This is about $8, $9 Canadian right now. That dividend yield set 14%. Obviously, it's a little bit high because the stock value went down. It was probably sitting at about 8% or 7% maybe when it was about $20 Canadian. So that's a little bit inflated. Like, obviously, it's normally not that much, and that dividend might get cut over the next little while. We just have to wait and see. But this is one I think that is super underpriced right now. Like, and I see why a lot of you guys were mentioning for me to buy this. Like $8 a share is crazy. You could buy like tons of shares. And if we look at the dividends, let's see if we can get some of the dividends here and kind of look at some of the dividends and see how they're going. So we can go on monthly distribution here, and it is a monthly distribution, which is nice. And we can see some of the old dividends. So 11 cents per share, which is cool. It's pretty high. Like that's one on the high end of the other ones. 11 cents per share is pretty high, and you can see that it's slowly increased it over time, which is nice. It's actually nice to see. We can see in 2009 when we have, this is the data we have so far, but 5 cents all the way up to 6 cents, then 7 cents, 8 cents, 9 cents, 10 cents, and a slow increase to 11 cents. That's a good sign. That means they're increasing their dividend yield. Now keep in mind that dividend might get cut a little bit because the stock went down so much, but we'll just have to wait and see. But I think this is a really good buy right now. I think this is one, like in terms of Canadian REITs, this might be one of the better hotter buys right now. And I think of course, you know, over time this one will eventually go back up. It's just a matter of when. Like this one might take a little bit longer since the other ones have jumped up a lot already, and this one looks like it's based out of Toronto. It might take a little bit longer than some of these other ones to rise up, but I think it's a perfect buy right now. So that's what I'm going to be buying. That's what I'm going to add into this account. When my transfer goes through, I'll go in and buy, we'll probably be able to buy about 10 shares, which is a lot of shares for a REIT. So that's what we're buying this week. So thanks for watching, guys. Thanks for joining me in this video. Let me know what you guys think of H&R REIT in the comment section, and let me know what you guys are buying in terms of real estate this week. Hope this video inspired you guys, and if you guys are new to the channel, be sure to smash that like button and subscribe if you guys want more Canadian investing type videos. So thanks for watching, guys. Thanks for joining me today, and I'll see you guys later.